Think crypto is just a high-stakes gamble, like throwing darts at meme coins and hoping for the moon? That's the amateur's game. Pros know better. They use cold, hard data to stack the odds. Today, we're debunking the myths and arming you with a 4-step framework to analyze any crypto like a Wall Street veteran. We'll apply it to Ethereum, the backbone of decentralized finance, to uncover why its network feels slow right now, when its price could finally explode, and how it's surprisingly linked to the stock market. Stick around, this could change how you invest. No crypto lives in isolation. It's all connected to the global economy. Let's start with the macro forces shaping Ethereum. First, monetary policy. When the Federal Reserve hikes interest rates, it's like turning up gravity on risky assets. Money flows to safe havens, pulling down crypto prices, including ETH. But rate cuts? That's rocket fuel. Cheaper borrowing sparks risk-taking, boosting everything from stocks to Ethereum. Next, economic indicators like inflation, measured by CPI. High inflation erodes cash value, driving investors to scarce assets like Bitcoin. And Ethereum follows suit as its smart contract king. Speaking of connections, ETH often mirrors the stock market. Data shows a correlation with the S&P 500. When stocks rally in a risk-on environment, ETH tends to climb too, sometimes with a 0.3 to 0.6 correlation coefficient. But lately, ETH's tie to stocks is loosening as it carves its own path in DeFi and NFTs. Why does this matter? If the stock market booms in 2025 amid economic recovery, expect ETH to ride the wave, but watch for divergences if crypto-specific hype takes over. Now zoom in on Ethereum itself. Why has ETH felt slow lately? It's not a myth. Ethereum's mainnet processes only about 15 to 30 transactions per second, far behind competitors like Solana. This stems from its design prioritizing security and decentralization over speed, leading to congestion and higher fees during peaks. But upgrades like the 2024 Dencun update and upcoming Pectra in 2025 aim to fix this with better scaling via Layer 2 solutions, potentially exploding throughput to thousands of TPS. Let's check its vitals with on-chain metrics, the blockchain's public heartbeat. Active addresses hover around 680,000 daily, with over 1.7 million transactions per day, signaling strong usage in DeFi and apps. Transaction volume hit $320 billion in August 2025, up 70% month over month. People are using it, not just holding. Tokenomics. ETH has no hard cap on supply, but post-2022 merge, it's deflationary. Fees burn ETH, reducing supply during high activity. Net inflation is near 0% or negative lately. Its utility, it's gas for the network, powering smart contracts, DeFi lending, NFTs, and staking for yields around 3 to 5%. Finally, development activity. Ethereum leads with thousands of GitHub commits across 285 repos, showing a thriving team pushing upgrades like sharding for speed. Consistent progress means ETH isn't stagnant, it's evolving. Data's great, but markets move on behavior. Enter technical analysis, simple tools to read price action. Support is like a floor where buyers step in. For ETH, that's around 4,000 to 4,150s. Resistance is the ceiling. ETH's testing 4,600 to 5,000 now. The Relative Strength Index RSI sits at 51, neutral, not overbought, above 70, or oversold, below 30, hinting at room to run. Volume matters. High-volume breakouts, like ETH's recent surges, signal real momentum. And correlation. ETH dances with Bitcoin, often 0.8 plus TIE, and the S&P 500, 0.3, 0.6. But it's fading as ETH matures, meaning it could decouple and explode independently if DeFi booms. This stock link explains why ETH dips with market crashes, but rebounds with bull runs. Time to tie it all together. Sentiment's key. Market psychology can swing prices wild. The Crypto Fear and Greed Index is around 50 to 60 in September 2025, neutral to greedy, showing optimism without euphoria. On X, formerly Twitter, trends buzz with ETH upgrades and ETF inflows, boosting hype. Synthesizing macro tailwinds, strong on-chain health, technical setups, and sentiment. Here's my thesis. Bull case. If rate cuts continue, DeFi adoption surges, and Pectra upgrade delivers speed, ETH could explode to $8,000 to $16,000 by end 2025, echoing 2017 ratios and institutional bets. Stock market strength would amplify this. Bear case. Competition from faster chains, regulatory crackdowns, or prolonged recession could tank it to $2,900 lows, especially if stock correlation drags it down. Base case: most likely, steady growth to 5,000 to 6,200 by year end, as upgrades resolve slowness and macro improves with moderate stock linkage. The explosion might hit Q4 2025 if sentiment flips to extreme greed. To recap our 4-step framework: analyze the big picture for macro ties, deep dive the coin for fundamentals like ETH's speed issues, read the market with technicals and correlations, then synthesize for predictions, like ETH's potential 2025 surge. Apply this to any crypto for smarter decisions. If this breakdown lit a fire, subscribe for more analyses. Drop in the comments. Which coin next? Disclaimer: this is not financial advice, for educational purposes only. Always do your own research before investing. Crypto is volatile, and past performance isn't future guarantees.